A very bullish day in the market. We had a pretty clean breakout for SPX here. As you can see from this pennant, we had a clean breakout right above, and it retested it this morning actually with this original 15-minute candle, then bounced right off the retest to continue a lot higher throughout the day. And as you can see with the daily chart, we had a pretty thick green candle bar to set us up for some potential continuation later, contingent on how FOMC minutes goes tomorrow. A lot of people are looking at that as a potential catalyst for some maybe volatility or even downside. However, in the past, it typically doesn't have that much of effect on the market. There was one in the past that was around like March or April, I believe, that was a decent catalyst for the downside, like back over here, before we had a lot of downside of this leg here. But for the most part, FOMC minutes tends to not be too much. So we will see what happens tomorrow, especially during this lower volume week, as you can see here with volume kind of diminishing. Not a surprise at all, because typically we do see lower volume the week of Thanksgiving, since on Thursday we do not have any trading, and then also on Friday is a lot less time. It closes at 1 p.m. Eastern. That is why today I am doing the video on Tuesday instead of our typical midweek Wednesday video. And today I do want to discuss some things about the current structure of the chart for the market on the SPX, as well as some of the other indexes. For example, the Dow Jones has been very, very bullish. This had a pretty clean break, and I mentioned this in our Twitter account earlier. It had a very clean break of this downward trend that started all the way at all-time highs back here. And recently, as of like the last 2 weeks, we broke out of it with a decisive gap up on November 10th, as you can see here. We had consolidation in a bull flag formation, and then another breakout today, which is very critical because we have a daily close above this mini pennant and bull flag formation here. So this is a good catalyst for potential upside, or at least continuation upwards. And the Dow Jones has helped tremendously with the S&P 500 because tech has been characteristically weak and has been weighing down on the S&P 500. However, with industrials kind of continuing to go upward and having a lot of bullish sentiment, that has helped aid the market a bunch so far. So this has aided SPX here, and I am going to continue to watch the Dow Jones to see if we will see this continue to go upward after this breakout, because that will lead to some more upside in the general market. Speaking of tech, we had QQQ today test the upper end of its own downward channel that started near all-time highs back here in end of December of 2021. If we zoom into the 15-minute chart here, I've mentioned this one in the past week, and we had a very nice close above this gray trend line right here. So it's crucial, especially if you're bullish going forward, that we hold above this line. In the past, at least the last 2 times we got above this line, back here on November 18th as well as November 15th, it was not able to hold. We fell back below over here following this day where it was holding over, and then back here we ended up selling off after it opened above. So it's crucial if you're bullish that we're able to hold above, because a rejection back under here would be very bearish. The fact that we rejected 3 times, that would be pretty bearish, and most likely mean that we have a lot more downside to come. So it's critical that we were able to hold above this level, especially on the daily for this week as well, for the weekly candle, and that would lead to some more upside for tech, which would help the overall market in general, since tech is pretty beaten down. Now let's talk about the dollar. We actually had quite the rejection, which aided the market today, especially SPX, for this kind of rally we had earlier today on Tuesday. And this rejection is crucial because it fell back into the range that we were previously. You can see here we traded within this range of roughly 106.30 to 107.30 as well. And we broke below it last week over here and then went back up into it. Continued to trade and consolidate in this range, then broke up above, but now we fell back into it. So now it's been 2 fake outs, a fake out to the downside and also the fake out to the upside, which means there's likely more consolidation in the future, which will aid the market in general, because without the dollar being able to rally continuously upward like we saw back here earlier in the week, the market will be able to have more bullish emphasis, and it will be harder for the market to fall because the dollar is staying stagnant. Along with that, it is worth mentioning the VIX here. Volatility has been hammered for the last roughly 9 weeks now, of 9 weeks straight of red candles that we've had on the weekly chart. So not very good in terms of volatility if you are a bear in the market, because of how much we've fallen so far. And also, if I go to the daily chart here, you can see this pennant formation that I have from the blue. This is the support level of the pennant, this lower end blue, and then the top here is the resistance. You can see that we are trading below the pennant right now, and we did trade below back in August when we made that pretty high top around like 4,300 or so in SPX, and we traded and consolidated here before it had a breakout for this gap up above, retested, and then continued upward. So as of now, this is showing quite a bit of weakness. You're going to want to see, at least if you're a bear, some form of consolidation similar to how we saw consolidation back here before a potential gap up back into this pennant, because otherwise, as long as we stay below this pennant, it is subject to more bearish emphasis on the VIX, which would be in turn bullish for SPX. It also should be noted that we still are trading above the range of high-level dark pool premium from the past couple of weeks on SPY. This range consists of roughly 374 to around 389, and this was millions upon millions of signature dark pool prints, at least the premium in this range, and we still are above it, which shows some bullish emphasis. And recently, as of this Monday, we stopped the streak of $1 billion plus each day. As you can see over here, we only had 598 million in premium for signature dark pool prints. So if you remember, the last 3 weeks straight, we've had over 1 billion in premium every single day on SPY. So that streak ended as of this week. So interesting to note, the streak ended while we continue to go upward, and the majority of those prints are below us, which means there is a bullish emphasis as long as we stay above the range from down here. Because as of now, it seems like this was a high accumulation zone for big level institutions to potentially load during this range. So again, we have our sentiment based on where price is trading, and price is trading as of now above this range of dark pool prints, as well as above this trend line I have right here, this gray one, which is the COVID trend line I've referenced many times, goes down to the COVID low because this is a critical pivot, up to the June low that we made. That was our previous yearly low, and now we bounced off of it as of last week, specifically on November 17th, and then we bounced off of it, had some more consolidation, and then boom, shot up straight again today for continuation upwards. So we will see what happens, but as of now, we are above both of these levels, which means there is some more bullish emphasis to go, at least to around this yellow line that I have over here. This is a similar downward trend line to the one that I showed you from Dow Jones as well as QQQ. This goes to the all-time high, drags down across these two other resistances we had in 2022, and converges roughly around 408 for SPY. Lastly, I'd like to bring your attention to Bitcoin, and Bitcoin isn't something that I typically check that often. However, if there's large moves that I see, it tends to have some form of an impact in the general market, specifically tech, because tech is more speculative like cryptocurrency. But as you can see here, this line by itself, just this one, the yellow one that you're looking at, is critical to hold for Bitcoin. If Bitcoin stays under for any sizable amount of time, as you can see here, it dipped below but came back up above today. But if it stays under for any sizable amount of time, especially a weekly close, this can get ugly pretty quickly, and you'd see a pretty quick, substantial drawdown on Bitcoin because of how critical this line is on it. I'm on the hourly chart looking at it. But if we go to the daily over here, you can kind of get a better picture of it. As you can see, right now, it is forming some form of a bear flag. So again, if it stays under decisively, that would be very bearish for Bitcoin. So if you are a bull, whether it be for just crypto or just speculative assets such as tech, you do want to see this at least consolidate for a little bit longer so tech can have some form of a bid with the market, because if Bitcoin does start to sell off pretty aggressively right now, that will have some market-wide impact.